Well, President Trump taking the opportunity to speak out on Fed Chair Jerome Powell's testimony. He tweeted earlier today when Jerome Powell started his testimony, the Dow was up 125 points and heading higher. As he spoke, it drifted steadily downward as usual. Germany and other countries get paid to borrow money. We are more prime, but the Fed rate is too high. We have the dollar tough on exports. We're reading into that a lot to dig through. Joining us now, we have Peter Tchir, head of macro strategy at Academy Securities. And Peter, let me just start with that tweet that President Trump had when he was talking about the Fed policy. What's your reaction to that?
You know, I think in the president's ideal world, he gets rates pushed down even lower, gets some good economic news towards the end of the summer, because he really wants a strong economy and a strong stock market, not necessarily now. He needs it in September, October, as people are going to the polls. So he wants to put as much pressure on the Fed as he can.
When we were listening to various comments from Fed Chair Jerome Powell, one thing that stuck out to me was when he was talking about the economy, he said that it was in a good place. We just heard Brian Tung talking about that from your assessment, from what you're seeing, what you're watching in the U.S. economy, and then also in the markets. Do you agree with that statement?
Yeah, and it's a little bit hard with what's going on with coronavirus, but if you look at where we were headed with the phase one trade deal, there were a lot of good indications. And last week, we actually had a lot of really strong data, including the jobs data. It kind of got lost in the shuffle of what was going on in coronavirus. So we got to get through that, which I do think will impact the economy. But I think we're in okay shape for this economy.
How big of a potential impact do you think it could be on the economy?
No, I think it could be much larger than people are thinking about. One of the things, we're all talking about supply chain. And when we go back to SARS, people got through it very quickly. Even when Japan was hit by the tsunami, the supply chain disruption was minimal. China is now 16% of global GDP. The supply chain I'm worried about. But they are also now the largest outgoing tourist nation. So China spends more than any other country in the world on tourism coming outside. So I think it's going to start hitting our economy as all these flights are blocked until at least April. We're not going to get that Chinese tourist. I think that's going to be hurt our economy more maybe even than the supply chain.
Do you think it could hurt our economy enough in order for the Fed to maybe take a second look and potentially alter their monetary policy in some way?
I do. And I think that's probably why stocks are doing okay here. I think everyone now believes that the Fed wants to be balanced. They don't want to influence the election, but they will overreact to negative news. So if we start seeing any dip in the economy, I think the Fed will react. It's not what I'd like to see them do, but I think that's how they're going to behave.
Peter, I want to play a soundbite that we heard just talking about the U.S. economy in the testimony earlier today with Ohio Congressman Steve Stivers. He asked Powell if he thinks that businesses and investors are trying to talk themselves into a recession despite the strong economy. Take a listen to what the central bank leader had to say.
I don't think so, and I certainly hope not. There's no reason why the expansion can't continue. There's nothing about this expansion that is unstable or unsustainable.
Peter, what do you think will continue to drive the market higher if, in fact, we don't have as big of a risk potentially as we could have from the coronavirus, like you were just mentioning? What do you think could be some of the catalysts that we are seeing in the market?
I think the U.S. consumer is still strong. And one of the reasons when people were getting very concerned about a recession back in August, again, we had very flat or inverted yield curves. Two things hit us. One is the nature of today's bond market is very passive. That actually tends to flatten or invert yield curves more than they would otherwise. So I think that signal has lost its tool. But the other is we talked to a lot of the companies that we deal with Academy who are lenders to consumers. They were not seeing any uptick in delinquencies or anything. And that same story continues today. So I think so long as the U.S. consumer is fine, we can continue and be a pretty robust economy.
So do you think that the U.S. consumer, it sounds like you do think so, but is pretty resilient in this time of uncertainty? Because not only with the coronavirus, of course, we have the potential future of trade between the U.S. and China, and there's many other uncertainties, too, that are on the table.
I think the U.S. consumer is actually quite resilient. And I think one of the things that's shaping up here is we're already seeing companies pull away some of their business from China, whether it's the supply chain. I think that's actually going to accelerate with this. Now, it's going to go across the globe, but some business might actually start doing more manufacturing in the U.S. So ironically, I think short term this could hurt, but I think we're actually going to see further pullback. People rethink their supply chains, and that actually might drive U.S. growth.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.